Hey guys, it's Kelly Watkins with the Bridge Group, and I am joined by Nick Salem with CTC Mortgage. Thank you so much for joining us
You're
today.
welcome. Thanks for having me.
So today we're talking all things interest rates, and that is definitely a hot topic over the past few months or the past several years. And recently, actually in the past week or so, we've seen rates drop a little bit. So tell us, how has that impacted our market now, and how is it impacting moving forward into 2024?
Well, as you know, we had a historic drop in interest rates last week. And so the impact hasn't really been felt yet. We did have a tremendous amount of locked loans that we did last week, and clients were super happy about that. Long term, we don't know how that's going to affect the market.
Darn, why can't you have a crystal ball and tell me what it's going to be like next year?
I know. I wish I did. We'd both be rich.
Right?
But I will say, like, going into 2024, even if interest rates do continue to drop, it's going to be a kind of a slow process for that. So it's not going to be an immediate, huge impact on monthly payment, stuff like that. But I still think it's a really great time to buy, because essentially what you're doing right now is you're buying a house and you're not having to go into bidding wars. You saw
true.
like the last couple of years, right? You remember?
Yes, it's been crazy.
You would have a client that would get pre-approved and put in 10, 15 different offers
Yes.
and not be able to get a house because they're bidding.
And they go up and up and up, and the price is so high that, that affects your rates and your mortgages for sure.
Absolutely. And not only that, you're actually bidding on a house that might be worth $300,000, but you're bidding $330,000 for it.
Yeah.
And so now you're having to come out of pocket $330,000 versus just buying that house at a slightly higher interest rate.
Right.
And maybe your payment's a little bit higher for a short period of time until rates do come back down,
Right.
and you're able to restructure, refinance the loan.
So what you're saying is that there's less competition right now, there's less inventory, so we definitely have that opportunity to negotiate on prices to really get that price for that home for a very good price versus just having a great interest rate.
That's right.
And then you can always get the home for a very good price and then refinance when those interest rates go down.
Yeah, and you could get lucky where we continue to have really good interest rates, as we saw
That's true.
this past week, and it's continuing right now. So we were seeing some of our competitors at 8.5%, and now they're below 7.5%. I recently priced out a loan just on Friday where I was in the sixes. So imagine if you were waiting to try to get back into the sixes, then we're there. We're right there.
Right, absolutely.
And I think also the biggest thing is what I took away from your meeting this morning was the sellers and builders are so willing to negotiate and give credits that there's so many ways that we can use those credits to structure it, to cover closing costs, to buy down the interest rate even more. So I would definitely work with your real estate agent and get with the lender and see what they can do for you.
That's a great point. There are a lot of sellers and builders willing to give credits and costs, and you can use those to buy down those rates. That will definitely help with those monthly payments that if you need to get it within a certain amount. But the biggest thing is going to be talking to a lender and seeing what price point you're going to be in based on what the interest rates are today. So definitely, if you have any questions or thoughts about buying in today's market in the Houston area, please reach out to Nick today, and he can get you pre-qualified and get you kind of set up on a plan to get in that monthly payment that works for you and your family. And reach out to the Bridge Group and we can get you in your dream home. See you next time.
Thank you.